You guys already know the deal. It is time for a Sofi stock update, and this one is a good one, and possibly one of the most important ones that you have seen from me in a very long time. As you do know, if you are an actual Sofi stock investor, you're not just watching this from the sidelines. You had a green week last week, and a quite substantial one at that. Even on Friday alone, we were up about 11%, approaching that $10 resistance level yet again. And I do think this week will be a bullish one, but I don't want to be too narrow-minded here to totally throw out the bearish catalysts that are still in the markets, because after all, not too much has actually changed. And this rally that we are seeing is called a bear market rally. So I want to give you guys the scoop on that, any of the news that came out over this weekend, as well as just the data that you guys need to know around Sofi stock and how I plan to trade this bear market rally to make the most amount of money. So, as always, the only thing that I ask is that you hit the like button and subscribe to the channel, because a vast majority of you guys are not. And I do promise to you, not too many things are promised here in finance YouTube or just finance in general. You will make money by staying up to date with these videos in due time. As well as that, if you guys want to support the channel for less than the cost of a Snickers bar, a bag of Doritos, or a McChicken from good old McD's, sign up in the description for Moo. With $1, you will get 3 free stocks as well as an additional free share of Neo upon your deposit clearing. Thank you guys for doing that. Also, source any news, questions, comments, or concerns down below in the comment section. I will do my best to get back to every single comment. I'm a real estate agent. I work full-time at another job. I own rental properties. I manage other people's rental properties. So I got a lot on my plate. So cut your guys some slack here. Thank you guys for tuning in. Let's get into this video. So, like I said, Sofi had a very bullish week last week, but this is what is called a bear market rally. And Google's definition here says a bear market rally refers to a temporary uptrend in prices during a primary trend bear market. The increase is usually between 10 and 20%. It starts suddenly and does not last long. Notable bear market rallies occurred during the stock market crash in the Dow Jones Industrial Average, and this happens all the time. If you guys were investors during 2018, 2019 crashes, or the 2020 crash, you will know this already, that the markets can go down a lot and then they can recover a lot on any given day. It comes down to a lot of different individual reasons, and every time it's going to be something a little bit different. But you got to ask yourself, did anything really change? Did anything change? Did any of the bearish catalysts go away? Yes and no, because believe it or not, the only thing the markets hate more than bad news is uncertainty, and the Fed gave us a lot of certainty, and they didn't give us anything that we were not already expecting. With the markets were pricing in 7 rate hikes, the Fed said you're going to get 7 rate hikes. They also put in this optionality factor that said, hey, if we need to do more, we will do more. If we don't have to do as much, we will do less. So there's a bit of that bullish tone there, because 7 rate hikes in 1 year is a lot as is. So odds of them doing more than that, not as likely as them doing less than that. At the same time, the biggest thing market participants really latched onto was the potential for a recession. The markets have been kind of starting to price in that, hey, a recession's probably coming in the next 6 to 12 months. Well, the Fed said, hey, we see no signs that a recession is coming, and that was really freeing up a lot of that uncertainty. Now investors can say, hey, the Fed gave us our outline, what to expect throughout the year, which we've already priced that in without the Fed saying that. So that's validation to what the markets were pricing in. As well as that, they're going, hey, the Fed doesn't see a recession. It's time to buy the freaking dip. And that's exactly what happened. And that's why I was calling for a bearish rally after the Fed. And that's why I said a stock like Sofi would benefit more than other stocks or other stocks that are not fintech stocks. Fintechs did very well, just like Sofi. Sofi did better than those other fintechs, and that's why I called that out, because the Fed and fintechs, it kind of rhymes, but it goes together like day and night, And you've seen a bullish reaction from the Fed and the markets, so you've seen a bullish reaction in Sofi stock. That's not to say it couldn't last longer. It really comes down to the headlines that are going to come out, because cool, the Fed gave us what we expected as far as rate hikes. Cool, the Fed said that a recession is unlikely. Well, if you start to see signs that a recession is coming and the economic factors are deteriorating, the markets are not going to care about what the Fed said last week or 2 weeks ago. They're going to focus on what's going to happen next. And I will tell you right now, the biggest potential fear catalyst is not Russia or Ukraine at this current moment, unless there is a chemical weapons attack, a nuclear strike, or if Russia attacks NATO. Those are going to be huge bearish catalysts. But the war's been going on. We know that's going on. We know what to expect really as far as supply chain concerns. Sanctions have set in. Yes, that's going to be another bearish catalyst, but that could take a little bit more time for the sanctions to kick in, for banks to lose pretty much all of their invested money in Russia. All of that going to take a little bit of time. Markets have really priced that in for a majority of the bad news that has come out, that will likely continue to come out. Now, the biggest potential bear catalyst here that will cause the markets to crash substantially is this, and this is a headline that just came out. So it says, Hong Kong's Lam says 250 restricted orders have been served. About 350,000 tested in restriction orders. Lam says 23,000 positive cases found from 350,000 COVID tests. That's the thing. COVID in China. China has a no COVID policy, so they lock down cities, they shut down factories, they'll do whatever they have to do to get rid of COVID. If they are unsuccessful with that, which it looks like they're not very successful as of right now, and that really starts to spread, and you see China locked down, you could imagine the kind of fear that will cause in the markets, not only for inflation and supply chains, but how long is it going to last? China really never seen COVID, and we were dealing with it for about 2 years now. So if China goes into a COVID wave, are they going to lock down the whole country? How long is that going to last? And a lot of our companies do a lot of business in China. There's a lot of manufacturing in China. Take, for an example, the biggest company in the world, which is Apple. A majority of their production is done in China at their Foxconn factories, and that was just shut down from China. So if you start to see actual fundamental problems that are going to affect companies here in America, that's when you see the peak fear, and that's what is really going to cause shit to hit the fan, for lack of a better word, for the markets. Who knows if that will happen? Who knows if they're going to get things under control or just botch the numbers that we are seeing, make them look less than they actually are? Who knows? Time will tell on that, but that's going to be the next bear catalyst to be watching for, and that's really going to be the big catalyst in the news headline that market participants react to tomorrow is, what's the COVID situation like in China? And it looks to be kind of on the bearish side, but again, it's really hard to tell right now. You're going to see a lot more market reactions upon China closing down segments of their country. So we'll see throughout the rest of the day. If anything like that comes out, that's going to be a bearish catalyst. But these bear market rallies can continue for multiple weeks. So I don't think necessarily all of the good news from the Fed, all of the clarity from the Fed is gone. I don't think that is going to be the case, and specifically with Sofi stock, Sofi will continue to benefit from that. Why? Because fintechs and the Fed go together like night and day. A bullish catalyst or a bearish catalyst from the Fed is going to do a lot more good and bad for Sofi stock for a lot longer period of time than your average Joe Schmo stock, right? So hopefully that makes some sense. I think the bullishness will last for Sofi stock, and I think we will break above $10 per share this week. But if we actually do take a look at first the max pain for Sofi stock, let's go ahead and pull that up. We can see that the max pain for Sofi for this upcoming Friday is $9 per share. So that would indicate a move to the downside. Who knows? These this data will update coming here first thing in the morning on Monday. So stay tuned for that video tomorrow. Things could change around a lot. But the max pain, for those of you guys that are unfamiliar, is essentially the price at which the most option holders, like buyers of puts, buyers of calls, lose money. Market makers like to pin stocks around the max pain because they make the most as being the ones that sold you those options. So it doesn't always work. It's not always a one-to-one correlation. That doesn't mean we have to go down to $9. That's not what that means. It means that that's where the market makers would make the most amount of money. Doesn't always happen like that. For an example, the max pain for this last Friday was $9.50. We were above that, almost $10. So it doesn't have to happen like that, but we'll definitely wait and see what happens with that. But as far as what will help fuel this rally, the short interest of free float is 19.13%. The current shares that are sold short is 137.98 million. The cost to borrow max is almost 7% at 6.91%, and the utilization is 100%. The higher the cost to borrow number goes, the more bullish you should be as a long-term investor in SoFi, or even looking forward to a potential mini short squeeze or just a move to the upside. And if the utilization stays at 100%, that's big as well, because it tells you hedge funds, institutions that own SoFi don't want to lend out their stock for even 7%. That's pretty good in my personal opinion. Not saying this will even cause a short squeeze, but it definitely can add to that buying power. When there's people bullish on a stock, and that sentiment really starts to change, there's a big pressure on these short sellers to get rid of their short positions, especially if we do cross above $10 per share this upcoming week. And if we stay above 10, it's going to look really, really good. The day's cover is sitting at 3.29 as well. So we also did see, and I do want to point this out, we've seen a quad witching day on March 18th. That's essentially when stock index futures, options on stock index futures, single stock options, and index options all expire at the same time. So you're going to see a lot of that money, that $3.5 trillion, which, fun fact here, is larger than about 99% of whole countries' total yearly GDP. You're going to see that position substantially to the bullish or the bearish side, and that's what you're really going to get a feel for on Monday and especially on Tuesday as well. So I want to see how that goes. You know, this is the largest quad witching day that we have seen in a very long time, so I can't give you guys any definitives there. The markets are going to react to the headlines. As far as the technical analysis is concerned, we kind of got rejected off of $10 per share just a little bit. It's still going to be a little bit of resistance. We're right under that. If we see a bullish day tomorrow, then you're likely to go straight above $10 per share. And I want to see what kind of sentiment we get above that. If we can kind of start to get back to $12, $14, that's going to be really good. 50-day moving average is going to be the resistance level though, and that is at $11.63. The MACD has turned bullish. This yellow line is now above the blue line. That happened on Friday. That is a good sign to go in and initiate a position, as history shows us. When you see that you know, the yellow line go above the blue line, it's a good time to start that position. The RSI does indicate we still have a lot more room to move to the upside. It's at 46.70 and neutral is at 50. So we're not even close to being overbought. Not even close whatsoever. As far as my SoFi stock position, average cost of $14.62 per share. I have 500 shares, 11.22% of my portfolio. Market value of almost $5,000. And I'm down about 32.42%. Not worried at all. SoFi is a banger for the long term. I could see this stock going from a market cap currently of $8.5 billion to 80 billion, 85 billion, a 10x in the next 3 to 5 years, and that's going to be a hell of a return, and I'm looking forward to it. As well as, like you guys already know, if you don't know, you're about to find out. You see Anthony Noto and the insiders of SoFi stock loading up on SoFi, buying millions of dollars worth here in the last couple of weeks in a rapid succession. So that's also helping to fuel some of this bullish rally. As well as that, my option trades that I've been very transparent with you guys about. I've laid out the risk here with that, and I've laid out the potential benefit. But I did make some money. I bought in 4 contracts at $48, bought in one as well at $47, and then I did go ahead and sell 2 of these and collected $152. So I kind of de-risked myself as far as that is concerned. No, excuse me. I sold covered calls, but I did buy. Let's take a look. Yeah, I bought 5 contracts at $32 a piece for $160, and then I sold 2 at $76 a piece for $152. Pretty much made them free, and now I do have 3 contracts for free still, worth $78 a piece. That's like $234 in profit. I plan to just put this into SoFi stock, but if that goes to show, I do think it's going to be a bullish week, so I want some additional exposure here around that $10 price. If we do break out, it's going to be really good. As well as that, given we are in a bear market bull rally right now, I did sell SoFi $15 calls. I sold 5 of them for about $47 a piece. I'm up just $4 on these, but I did want to collect some premium because I don't think SoFi is going to go straight back to 15. I think there's too many bearish catalysts here to go straight back to over $14 per share. In other words, I don't think we will close above $15 per share by July 15th. Not my expectation. I think you'll see that really bullish rally end of this year, not the middle of the year. So we have a lot of headwinds to get over. I hope you guys found value out of this video. I wish I could tell you with certainty which way we will go. It looks good now, but watch those headlines that are starting to come out today. So that is going to be all for this video. Hit that like button, subscribe to the channel if you guys have not already, and get yourself those free stocks. Links down below in the description. Thank you guys for watching, and I will see you in the next one.